Welcome to TalkTickers. We're diving into the Straumann Group's Q1 2025 earnings call today. Our goal, as always, is to pull out the key insights for you, the experienced investor listening in.
And Straumann certainly gave us a lot to talk about. They started 2025 strong. Q1 revenue hit 681 million Swiss francs. That's a impressive 11% organic growth.
11%. Okay. Was that concentrated or?
No, actually, it was pretty dynamic demand across all their business segments, broad-based.
Good to hear. And profitability. What's the outlook there?
They're expecting the core EIT margin earnings before interest and taxes, that is to improve, somewhere between 30 and 60 basis points for the full year. That's at constant 2024 currency rates, of course.
Right, the currency caveat.
Exactly. Oh, and importantly for investors, they bumped the dividend up by 12% compared to last year.
A 12% dividend hike alongside 11% organic growth. That's a pretty positive start. Okay, let's break that 11% down. Regionally, where did the strength come from? You mentioned EMEA, Europe, Middle East, Africa.
Yeah, EMA had an excellent quarter. There's a confluence of factors, really. You've got generally more spending on health and well-being post-pandemic.
Okay, that makes sense.
And specifically in dental, the price gap between traditional bridges and implants, it's narrowing.
Making implants more attractive financially.
Exactly. Plus, you have better insurance reimbursement coming through in some areas, and critically, more dentists actually trained to do the procedures.
So a favorable market environment. How did Straumann specifically leverage that?
Well, their multi-brand strategy is key here. They can hit different price points. They've also invested in going direct to market in places like Eastern Europe and the Middle East, and that seems to be paying off.
The other businesses, scanners, aligners.
Yeah, those adjacent businesses contributed too. Scanners, clear aligners, it all adds up. Within implantology itself, their challenger brand saw double-digit growth. The premium brand gained share too, helped by launching new solutions like the Straumann Access platform and that EXL implant system.
EXL, okay, we'll come back to that. And orthodontics.
Ortho saw meaningful double-digit growth as well in EMA. Very solid performance across the board there.
Right. Let's shift over to Asia Pacific. They mentioned a record high.
They did. A historical high for Q1. Strong double-digit growth, particularly outside of China. Think Thailand, India, Malaysia.
Emerging markets driving it.
Largely, yes. But developed markets like Australia and Japan also sustained good growth. Implantology was the main driver. Again, both premium and challenger brands doing well.
Any role for digital solutions there?
Yes, definitely a meaningful contribution from digital. And they mentioned launching an entry-level scanner, which likely helped broaden adoption.
And China. You said growth was strong there too.
Strong growth in China, yes. They put that down mostly to the structural impact of volume-based procurement, VBP.
Right, VBP. Can you just quickly remind us how that works in China and it affects companies like Straumann?
Sure. So VBP is basically the government negotiating bulk prices for medical devices, including dental implants. This dramatically lowers the cost for patients, which, unlocks a huge amount of volume, especially in lower tier cities, perhaps.
Okay. So it drives volume, but potentially impacts price per unit.
Potentially, yes. But for a company like Straumann with multiple brands, including more value-oriented ones, it allows them to compete effectively for that increased volume. It kind of plays to their multi-brand strategy.
Got it. Now, North America sounded like a different story, softer demand.
Yeah, North America was facing more headwinds. The macro environment there is just tougher, hitting consumer confidence, which flows through to elective procedures like some dental work.
But still growth.
Still positive growth, yes, in both premium and challenger implant segments. They mentioned the EXL launch helped the Straumann premium brand specifically. Their athletics business, though, remains soft. Digital solutions did contribute positively, which is good news.
Okay, a mixed bag in North America. And Latin America.
Latin America was consistently strong, continued that strong double-digit growth trend.
What was leading the charge there?
The implant business, particularly their challenger brand Neodens, was the main driver. Brazil and Mexico were highlighted, but they also saw acceleration in the premium segment growth, which is interesting.
And ClearCorrect, their aligner business.
Impressive performance from ClearCorrect down there too. Again, Brazil and Mexico were the main contributors. And strong demand for scanners helped the digital side as well.
So quite distinct regional dynamics playing out. Let's pivot slightly to the financials beyond the top line. You mentioned currency.
Right. It was muted in Q1, the impact. But with the Swiss franc strengthening, that could become more of a headwind in the coming quarters. Something to watch.
Any M&A impact in Q1?
No M&A impact reflected in these Q1 numbers.
And how are they thinking about capital allocation now?
Priorities seem unchanged, really. Focus is on reinvesting for sustainable growth, maintaining a strong balance sheet, the fundamentals, also ensuring they support customers through their supply chain, keeping sufficient inventories, and then keeping an eye out for strategic M&A.
And the dividend increase fits into that shareholder return piece.
Exactly.
Okay, let's look forward then. Strategy and outlook. They sound pretty confident despite the regional variations.
They do. They frame it well. They operate in a growing market, estimate their overall share at about 12.5%, but they lead in implantology with roughly 35% globally.
So still room to grow, even as the leader.
Absolutely. They see significant runway in what they call underpenetrated markets, places like France, Germany, even the US and India. They believe growth there will come from, more patient awareness, more trained dentists, and treatments becoming more affordable, like we discussed with VBP in China. That dynamic could play out elsewhere, too, over time.
And it's not just about implants, is it? Their strategy seems broader.
That's a key point. The diversified portfolio helps a lot. The multi-brand approach in implants caters to different needs and budgets. Plus, their expansion into orthodontics and digital solutions gives them flexibility and, frankly, more shots on goal.
They also mentioned their manufacturing footprint expanding.
Yeah, quite significantly. They have 19 production facilities now, up from just 6 back in 2013. That includes the new Shanghai campus in China, which is about to become fully operational. This strengthens their supply chain, makes them more agile.
Are they doing local production elsewhere too?
Yes, they specifically mention leveraging local production in the U.S., which is important given some of the trade discussions happening.
Right. So their strategic compass points towards innovation, digitalization, and education.
Those are the 3 pillars, yes. Innovation and digitalization cover both the what and the how. Well, the what is product innovation, things like the EXL implant system for better clinical results, or their Falcon navigation system, cloud-based prosthetic services aimed at clinical excellence and efficiency. The how is about the customer experience, making things simpler, more efficient, more convenient. Their Access Cloud platform fits here.
And collaborations, like the SprintRay one.
Exactly. That partnership with SprintRay for CareSide 3D printing, specifically for single-tooth restorations, fits right into that innovation and how focus, making treatment faster and potentially cheaper at the point of care. And the third pillar, education, is straightforward but crucial. They're investing heavily in training dentists and orthodontists.
And expanding production capacity ties into all this.
It has to. They're ramping up the Shanghai campus, particularly for the China VBP products starting H2, and building a third Neodones factory in Brazil, which should be operational by the end of 2026.
So, despite acknowledging macroeconomic uncertainties,
they're sticking to their guidance. High single-digit organic revenue growth for 2025, and that 30 to 60 basis point core EIT margin improvement at constant 24 rates.
And tariffs, are those a major concern?
They seem to think the impact will be limited. They say it's already embedded in the guidance, partly because their global network and optimization efforts give them flexibility.
Okay. The Q&A after the call usually adds some color. Anything particularly noteworthy jump out at you there?
Yeah, a few things. They doubled down on the guidance being achievable, even maybe a bit cautious given the Q1 strength. If things stay strong, they might revise it up later.
What about new products driving growth?
They highlighted 3 key ones for the next, say, 24 months, that EXL implant system in the premium segment, their intraoral scanner portfolio, especially the entry-level Seris model, and that SprintRay partnership for chairside solutions.
Makes sense. What about North America? Did they elaborate on the softness?
They mentioned demand was a bit volatile within Q1, but actually ended better than it was mid-quarter, so no worsening trend observed, which is somewhat reassuring.
Currency impact again.
They put some numbers on it based on current rates, potentially a 100 basis point headwind on the top line, maybe 20, 30 basis points on the bottom line from FX.
Manageable, but noticeable.
Sure.
And U.S. patient volumes overall.
Still expect them to be ahead of 2024 levels for the full year.
How's ClearCorrect doing specifically? You mentioned strength in LATAM.
Yeah, double-digit growth outside the U.S., good feedback on improvements they made. U.S. growth, however, has been softer.
Do they make much locally in the U.S., thinking about tariffs?
Quite a bit, actually. Customized prosthetics, clear aligners, some biomaterials. Their challenger implants from Brazil are subject to tariffs, but a lot is produced stateside or sourced differently. Digital is more partner-based.
Interesting. Germany and France, any specific comments?
Germany was strong across the board. France was okay, but below their own expectations. They actually mentioned a recent leadership change there to try and boost performance.
And globally, is challenger or premium implant business growing faster?
Challenger is growing faster globally, but both are showing strong double-digit growth. So the premium segment isn't exactly lagging.
Did the big IDS dental show impact Q1?
They said limited impact. It's more of a showcase, less direct selling. Interestingly, the timing of Easter did help EMEA in Q1 compared to last year, but that will likely reverse somewhat in Q2.
What about China? Still dynamic.
Very much so.
Yeah.
VBP is unlocking demand, especially in lower-tier cities, makes their multi-brand portfolio really crucial there. They expect double-digit growth for the full year in China.
And profitability for clear aligners.
Not yet profitable. The focus is still very much on growth, reaching critical mass, improving the value proposition. Profitability will follow, presumably.
Okay, that covers a lot of ground from the call. Right, let's move to our This Is Not Financial Advices segment. Based on everything we've just discussed, what's an outrageous but plausible trade idea that springs to mind?
Okay, here's one possibility, playing on those regional dynamics. We heard about that really strong double-digit growth in emerging APAC markets, excluding China, places like India, Thailand, Malaysia. And the driver seems to be rising middle classes, better healthcare access, implants becoming more affordable.
Right, so the idea is...
Well, maybe consider a long position, perhaps in a basket of dental supply companies, not just Straumann, but others too that are specifically well-positioned in those emerging APAC markets. You need to do your homework to find the right names. The bet is on that specific regional growth story continuing. But you'd want to maybe hedge it.
Hedge against what? The China complexity?
Maybe hedge against the potential for continued softness in, say, the U.S. market in the near term. So you could pair that long APAC-focused basket with a short position in a broader U.S. healthcare index, for instance.
Interesting. Targeted long growth, hedged against potential broader market softness. Plausible, certainly outrageous enough for this segment.
That's the idea.
Okay, another one.
How about focusing on China and that new Shanghai campus? It's set to really ramp up in the second half of the year, specifically targeting cost efficiency for VBP 2.0.
VBP 2.0, the next phase.
Exactly. So the trade could be a pairs trade within the dental sector. Go long Straumann Group, betting that their localized production in China gives them a significant edge in profitability and market share gains under the evolving VBP rules.
Things short.
Short, a competitor who is perhaps heavily reliant on exporting to China without that significant local manufacturing capability. The thesis being they'll face margin pressure from potential future tariffs and might struggle to compete effectively in the VBP environment without local production.
Long local advantage, short import disadvantage in China. That definitely qualifies as outrageous but plausible too.
Food for thought anyway.
Absolutely. And that wraps up our deep dive into the Straumann Group's Q1 2025 earnings call. We've covered the strong results, the regional nuances, their strategic direction, and even a couple of speculative trade ideas.
Yeah, lots of moving parts, from macroeconomics to specific product launches and regional policies like VBP.
Hopefully this breakdown has given you some valuable perspectives. What stood out most to you? Are there questions still lingering? Definitely continue your own research.
And just to reiterate, nothing we discussed here constitutes financial advice. It's purely our interpretation and discussion of the earnings call information.
Exactly. Join us next time on TalkTickers, where we'll dissect another key earnings call.